Welcome back to XFO Intelligence Podcast. I'm here with my co-host, and today we're diving into something that's going to fundamentally change how you think about investing.
That's right. If our last episode on observation and reality challenged your understanding of the universe, today's discussion is going to challenge everything you think you know about financial markets.
We're exploring groundbreaking research from Brendan Wong of XFO Intelligence on what he calls Observer-Actualized Markets. And frankly, this could be the most important investment framework you'll encounter this decade.
Now, before you dismiss this as academic theory, consider this. What if markets don't actually discover pre-existing values? What if they create value through the very act of observation and investment?
Think about that for a moment. Traditional finance assumes we're searching for some objective, fundamental value that exists independent of our actions. But what if that's completely wrong?
Wong's research reveals that financial markets behave more like quantum probability fields. Companies don't have one true price. They exist in what he calls value superposition, simultaneously possessing multiple potential valuations until measured through market action.
This isn't just philosophical speculation. This explains market anomalies that efficient market theory can't touch. Bubbles, crashes, the reflexivity that George Soros identified but couldn't fully explain.
Let me give you a concrete example. When Tesla's stock was trading at $900, it wasn't overvalued or undervalued in any objective sense. It existed in a superposition of possible valuations based on multiple scenarios.
Exactly. And each investment decision was like a quantum measurement, collapsing those probability waves into specific price realities. The market wasn't discovering Tesla's value, it was actualizing one possibility from many. This has profound implications for how we invest. First, position sizing. Instead of binary decisions, we should allocate capital according to probability assessments. Right. Calculate probability distributions, size positions based on confidence levels, and continuously update probabilities as new observations emerge. Sharply. Second, what Wong calls narrative gravity investing. Investment narratives create self-fulfilling prophecies through collective belief and action. We've seen this repeatedly. The dot-com narrative, the housing narrative, the AI narrative today. These become reality through collective investment behavior.
And here's where it gets interesting. Reflexivity mapping. You need to analyze how your investment actions might influence the reality you're trying to predict.
This is crucial for family offices and institutional investors. Your capital allocations don't just follow trends, they help create them.
Wong identifies measurement timing, strategically timing investment actions around key reality collapsing events like earnings announcements or product launches.
These are moments when the market literally reactualizes prices. If you understand this framework, you can position yourself before these collapses occur.
For our listeners managing significant capital, this means recognizing that you're participating in creating market reality. Your investment thesis helps actualize the future. Think about private equity. When a PE firm invests, they're participating in creating new realities through strategic guidance and operational improvements. This framework explains why the most successful investors seem to operate on principles that traditional finance can't explain. They understand this participatory nature.
Now, I want to address something directly to our listeners. This isn't just theory. This is actionable intelligence, but we need your feedback.
We're at the forefront of a paradigm shift in investment thinking. Your experience and questions will help refine this framework.
Have you observed these probability collapse patterns in your own investment experience? Can you identify moments when your capital allocation helped actualize the reality you were betting on?
We particularly want to hear from family offices and institutional investors. You're managing capital that can influence reality actualization.
Take this framework back to your investment team. Don't just discuss it, experiment with it. Start thinking probabilistically about your next major allocation.
Map the reflexivity loops. Identify narratives that might become self-fulfilling. Consider your role as reality co-creator.
And reach out to us. Start a discussion with your investment team about these concepts. We want to hear your insights and discoveries.
If markets really are observer-actualized probability fields, then investors who understand this first will have a massive advantage.
They'll be navigating reality while others are still trying to analyze it.
The future belongs to investors who recognize they're participating in reality creation and develop strategies accordingly.
Take these concepts to your investment committee. Test them, push back on them, develop them further.
Share your thoughts with us. The conversation we're starting could reshape how institutional capital gets allocated.
Remember, every investment decision is an act of reality actualization. Will you make those decisions consciously?
This has been XFO Intelligence Podcast. We want to hear from you.
Until next time, invest consciously. You're participating in creating the market realities of tomorrow.